Urbanization, climate change, and technological innovations are some of the key megatrends that may have the greatest impact on our future. The strategy is focused on capturing the growth opportunity from the smart city investments required to help build a better future through innovation. Cities are home to more than half the world's population and more than 80% of global GDP, but they are facing numerous challenges such as pollution issues, traffic congestion, crime and safety concerns, strain on public services, and more. It is estimated that by 2026, over $3 trillion may be spent on modernizing our cities with intelligent solutions across industries. The strategy invests in innovative companies across the capital structure using a unique multi-asset approach. The goal is to provide investors with an income stream and attractive equity market exposure, but with less volatility than a pure equity strategy. We see many opportunities to invest across the entire intelligent cities ecosystem and focus on three key dimensions impacting everyday life. Infrastructure, building the city. Critical building blocks across next-generation connectivity, data centers, smart grids, smart buildings, and clean energy are now being put in place to enable the city of the future. In management, or think overseeing the city, digital transformation is creating new solutions that can better manage assets and resources more efficiently to improve the quality, safety, and sustainability of city living. Services, living in the city. New digital apps and smart services that enhance the quality of life for everyday people living and working in the city. With COVID-19 impacting businesses on a global scale over the last few years, companies have had to quickly adapt to support work from home, omni-channel commerce, and changing behaviors. Our cities face increasing environmental pressures and infrastructure needs, and demand from residents to deliver a better quality of life and do so at a sustainable cost. As we begin to reopen our economies, given the significant progress with vaccines and new antiviral treatments, a post-COVID world will need to be agile to handle a hybrid work-life environment for the foreseeable future. Governments and corporations are now investing to make our cities and offices safer and more productive to bring people back to work. For example, buildings are being updated with better air filtration systems to prevent the spread of COVID. Cities are investing more in modern law enforcement and public safety technologies and softwares to improve response times and quality of service. Companies and cities also continue to invest in digital transformation initiatives for greater agility and digital access to every service while driving down costs. The intelligent cities landscape is broad, which provides diversified exposure across many themes and sectors. This also helps the available universe to invest across the capital structure of many companies and leverage the benefits of other asset classes like convertibles in reducing portfolio volatility. This strategy focuses on 8 key themes that we believe represent the biggest opportunities ahead to build a better future through innovation. From software and services that improve our daily lives, to safety and security, protecting the people and property, to intelligent buildings to reduce the carbon footprint, to clean energy to get off fossil fuels. The strategy has diversified exposure across different themes and sectors. Hundreds of cities worldwide now have significant budgets and are investing to improve city infrastructure, services, security, transportation, healthcare, and more. There are now over 500 smart city projects globally, and the market opportunity for intelligent cities ecosystem is very large. To capture the intelligent cities opportunity, we believe in applying a unique multi-asset approach that invests across the capital structure of a company. First, by identifying the company's best position to benefit from the smart cities megatrend based on our fundamental research. Then we select the most favorable segment of the capital structure, which includes equity, convertible, or fixed income securities, to invest in that exhibits the most attractive risk-reward profile. We have designed a unique solution with the goal of income and capital appreciation with less volatility than a pure equity strategy. Our target allocation is approximately 50 to 55% equities, 30 to 35% convertibles, and 10 to 15% fixed income, and rebalance periodically. Example of potential sources of income include bond coupons, equity dividends, capital appreciation, and covered call premiums. With different market cycles in mind, it can be helpful to leverage different asset classes to better weather down markets and still participate in up markets through a more balanced total return profile. While markets are likely to remain choppy in the near term, we believe certain oversold areas could be in the bottoming process as their valuations are nearing historical ranges. The upcoming downward earnings revision cycle as economic growth slows has been well anticipated by the market and is a necessary step to improving investor sentiment. Looking through the volatility, our team holds that a global recovery is underway as the virus abates, though at uneven rates across the globe. We continue to maintain a balanced portfolio of innovative companies that have both secular and cyclical growth characteristics. The strategy's multi-asset approach has helped to dampen some of the recent market volatility and still participate as the market begins to recover. Upcoming policy support should provide tailwinds for the strategy. For example, the U.S. Inflation Reduction Act proposal has significant funding to fight climate change and invest in infrastructure. The European Green Deal and the recently Renewable Power EU plans to rapidly reduce dependency on Russian fossil fuels over the coming years. China has large infrastructure investments to revive its economy, and there are other stimulus proposals from around the world that should help to provide more funding over the coming years to improve our cities and fight climate change.